Balkrishna Industries, that's the stock which is in focus, reported its Q3 numbers. The PAT, EBITDA and margins have all come in lower on a year-on-year basis, and the stock is well under pressure by a good 11.25% right now. Let me take it across to Vamakshi, my colleague, and find out what went wrong with their quarterly performance. Hello.
Well, absolutely. The third quarter numbers for Balkrishna Industries were a weak set of numbers, and that is the reason why the stock is tanking in trade today, like you rightly pointed out. Now, revenues did see an uptick of nearly 6% on a year-on-year basis, but it did see a dip on a sequential basis. Gross margin came in at 48.6%, which is a cut of nearly 500 basis points on a year-on-year basis. And the gross margin actually came in lower despite seeing a correction in the raw material prices, and that was mainly on account of high cost inventory that is already in the system. EBITDA was also lower by nearly 44% on a year-on-year basis. In fact, brokerages have highlighted that the company sharply missed their EBITDA estimates, led by lower volumes as well as lower EBITDA per kg. When we look at the net profit, that saw a gash of nearly 70% on a year-on-year basis, down from 339 crores to 108 crores. When we look at the volumes for the company, that have also declined both on a sequential as well as on a year-on-year basis. Volumes came in at 66,480 metric tons, which is down nearly 5% on a year-on-year basis, but the sequential dip is much higher at 16%. When we look at the key markets, volumes saw a decline of nearly 8 to 13% in the global markets, but their India business fared better in terms of volumes, reporting a 21% growth on a year-on-year basis. The management commentary, however, is appearing to be quite sluggish on the demand front. When we're looking at the volumes, the management has highlighted that the pressure seen is expected to continue in the fourth quarter as well in Europe as well as Americas, and amid continued destocking. The situation, however, they're highlighting is better in the North America region, but the recessionary fears that are there in that region continue to impact